Hello traders, welcome to the LFB and our global video charting review. This is for the currency review on the 24th of May 2011. My name's Mark O'Haig from the LFB Trade Desk. Hope I find you well. We do ask that you pause the video, read the disclaimer and accept that disclaimer before proceeding. The news wires are very quiet in regard to currency and foreign exchange trade, and this week's economic calendar has only got sporadic economic releases that would have a chance of impacting currency valuations, and therefore from a news perspective we're not looking for too much in the way of breaking news to actually instigate some movement. We're going to keep an eye on the midterm charts on our technical reviews today. Going to look at the dollar index and then the major currency pairs. But we will notice when we go into the technical reviews on the major currencies that most of them have got the 50-day or the 100-day simple moving average areas, which are very important technical price points of note, very close. So we will have a common theme here. Near term, the charts are getting very choppy. They're overlapping recent US dollar strength from a technical perspective, and with a lack of economic releases from a fundamental point of view, it's going to be that midterm technical break that maybe draws in momentum to hold. 4-hour chart on the current month, front month futures contract for the dollar index, DXM1, we can see the 50-day moving average. That's the green line which we have here. There's the 20-day simple moving average, which is very important as a support price point. 74.50. We do know from previous trading history earlier this year and during 2008 to 2010, we saw on dollar index trade a test of 74.50 that was very important. So that is a price point of note that we will keep an eye on. The 50-day moving average around 75.50, and from a technical perspective, we've got blue candles here. These are momentum candles. When they're white, that tells us that the momentum is in short mode. When they're blue, that tells us there's been a swing in momentum, a change in momentum to the long side of things. Also, we have a trend line that determines for us the white line. Should we be trading short or should we be trading long? At this point in time, the white line's pointing up towards 2 o'clock on a clock face, and we've got blue momentum candles. So we've got trend long, momentum long on this 4-hour chart. That sets up a buy the dip, not necessarily a buy anything. It's long, but when you look at the daily chart, you'll see that the trend is still very much short on the dollar index. But this now sets up a buy the dip play on the dollar. So where we're going to dip to, that 50-day really does look as though it will get tested again. It's also the third point on this trend line. There's the first trend line point. Second, that will be the third trend line test as well. And if you've done the online training courses that are available from the LFB website off the homepage, you'll know from a technical perspective that trend line really gets a lot of credibility when there's 3 touches, not as credible when there's only 2, because you could find a trend line really anywhere. You need the market to test that area. So we are looking for a potential pullback on the dollar index to around the 75.50 area. Fundamentally, what will trigger that will be some US equity market, S&P 500, German DAX equity market, and maybe Japanese Nikkei equity markets finding buyers. Equities are going sideways at the moment, favoring the short side of equities, which does mean that the US dollar will get buyers just because of the historic US dollar up, equities down, and vice versa, because of the move out of risk when you sell equities into bonds, which you invariably will go to the US 10-year treasuries, which are dominated by dollars. When we look at euro dollar, makes up nearly 60% of the dollar index. we've got that same trend line set up in reverse that the dollar index has. One touch, two touch. We're looking to the third touch on euro dollar, and that's going to be around the 41.50 price point. 50-day moving average is going to be very stiff upside resistance, and you can see we've hit these numbers to the pip. There's the 100-day moving average as support. Hit that to the pip. That's a very tight channel now. 50-day at 43.50, 100-day at 4,000, that kind of area, because they are price point areas. They're not exact price points of note. They're going to be really a lot of cause and effect built in there. There's really going to be an awful lot of momentum builds as euro trades within this very tight channel, which replicates the look and the feel of most of the global equity indices as well. There's talk of Eurozone peripheral bond problems and debt issues, but what we do have to understand is on the days that equity markets go higher, the bond issues in Europe and the government debt and the peripheral defaults really are not important at all. On the days that equities go lower, risk is sold, dollar index goes higher, as we've just covered. Euro makes up 60% of the dollar index. When equities go down, euro dollar tends to go down in general. And when equities go down, everybody looks for the negative headline for the reason that equities are going down. It's not necessarily that equities are being sold and banked at yearly highs. Suddenly there has to be a negative reason for equities to drop. So equities have been going lower. Therefore, the Eurozone peripheral problems which are ignored on the way up suddenly become the reason. But reality is this is a global market, and euro is dominated a lot more in its valuations from equity overall momentum and outlook rather than the near-term economic outlook on the Eurozone when you look at the big picture. Looking at Great British Pound, we've got a very similar chart to Euro, stuck in a sideways channel. This one has had on its trend line its third touch, so this trend line's got a lot of credibility. 1, 2, 3. We're now looking for a reversal from this 61.50 on the Great British Pound. We are in short mode, we're in short momentum reads, and we've got underneath the 100-day moving average, which is going to be very difficult now to break. Would favour the short side of the pound. That's setting up a sell to test of resistance move. Australian dollar looks very similar to euro, and Aussie dollar has been following and tracking the equity markets very, very closely in the near term. We've got the same trend line set up. We've got the same simple moving average look and feel. Aussie's very close to this third touch at this point in time, only looking to be on the short side of the Australian dollar all of the time that global equities are getting sold. Looking at dollar against the yen, a really ugly chart, a load of upside resistance. 50-day, 100-day, 200-day simple moving average, massive, can't underestimate that. Massive resistance to the upside that's going to be very, very, very difficult to break down. Be very careful getting on the long side of dollar yen if you don't have a very defined plan for how you're going to get out. Very choppy, overlapping look and feel to the Canadian dollar. This is dollar against the Canadian. Got the same look again, same kind of trend line look, trading around the 100-day, the 50-day, and that's going to create an awful lot of intraday volatility with all of these major pairs all got the same kind of look and feel to them. Last but not least, we'll look at dollar Swiss. We've got a different review really and a different outlook from this technical chart on dollar Swiss. Shows you that although the market does buy US dollars when equity markets go down, there are certain pairs that move a lot harder than others. Euro, Aussie will move more in line with movement in equity markets than, for example, the Swiss franc will. This US dollar Swiss franc currency pair really is showing us that there's not a desire to be long the US dollar because of economics and growth. It really is a flight to safety.